All right, so a fella got absolutely butthurt because I was taking the piss out of accountants around the telltale signs that so many business owners complain about when it comes to their accountants not actually assisting them grow and scale a profitable and sustainable business. This guy got the shits, jumped into the DMs, and gave me an absolute narrative about all of the reasons why everything that I said was wrong. So let's unpack this and let me give you a look into the mind of a typical dinosaur accountant and the reason why I enjoy picking fights with accountants so much because of this closed-minded perspective, this elitist perspective that they hold no responsibility around helping their clients achieve their goals. So this particular individual said, business owners with a 6 or 7 figure turnover looking to expand. 1, you're legally obligated to be paying and remitting GST quarterly and possibly pay-as-you-go withholding monthly. Therefore, your account must be reconciled at least minimum, a cash basis, at least quarterly. So let's unpack this a little bit. Now, the fundamental thing here is there is a big difference between your tax liabilities and responsibilities and the sustainability of your business model. Now, the common complaint that we see from business owners when they're dealing with their accountant is that their accountant might do their BAS. Potentially, they've got an external bookkeeper doing their BAS on a quarterly basis. And they say, hey, Mr. and Mrs. Client, you've now got $50,000 to pay to the ATO as part of this BAS. Good luck, and I'll see you next quarter. There is no conversation around, okay, were you prepared for this? Did you have the appropriate structure to apportion funds for this? Is your financial model supportive of this? And if you have a look at the insolvency statistics and the feedback from small business owners around their tax liabilities, the vast majority of them complain. I didn't realize what the actual responsibilities were. I'm always surprised by tax bills. The burden of tax responsibility is too great. Where is the accountability to having the conversation with the client around the sustainability of their business model? And I know exactly why this happens, because these business owners, for most of them, they're great technicians. They've started growing and scaling a business. They've got onto a good thing. They've started trying hiring people, creating scale, and they haven't necessarily looked at their pricing, understanding their cost to serve, understanding the ongoing responsibilities of putting money aside, because on their P&L they accrue for the tax liabilities as part of their wages and salaries, but it doesn't necessarily mean they're moving that money over to a separate bank account to ensure it's there at tax time. So before they know it, it slips through their fingers. But who taught them this stuff? Why aren't you taking responsibility as an accountant to have these conversations with your client? And of course, charge for those services because there's value to be had there. Next, also an opportunity to align your current year quarterly income statements with the next year, with your current year's revenue, something which business owners will refuse to do. Why should I prepay my tax now? Better in my hand than the ATO. Well, once again, this is about having the conversation with your client. Mr. and Mrs. Client, is it important for you to have forced savings to ensure that you're putting money aside? And would you prefer to have that out of sight and out of mind every single month? Or do you have a system in place that ensures that you put that money into a tax bucket, you have it there, but you defer the payment until the end due date? The reality is the outcome is going to be exactly the same. Sure, you might make a little bit of extra interest, but certainly you shouldn't be going and blowing that money on buying a new ute, right? So once again, very closed-minded view from an accountant's perspective, not my responsibility. It's the client's responsibility. Now, generally, this is the same crowd who will proceed to spend the money and complain at tax bill shock. What have you done to educate them around this? Now, once again, I'm not trying to say that it is solely your responsibility, but you are in partnership with your clients. You should be acting as a coach and as a mentor to ensure that we say, and this is what we do for our clients, hey, Mr. and Mrs. Client, here is your forecasted tax liability based on your estimated profitability for the year to date. Based on your PAYG and your superannuation installment, this is how much you should have aside. And same thing for your GST. And we forecast that over 12 months and we say this is how much you should have in this bank account each and every single month. So unless this bank account balance is met, then you haven't put enough money aside for tax. In fact, the system that we help our clients implement gets them to oversave for tax. So then what we do is we sweep that money from the tax bucket and then we move that into the profit bucket. A little trick that many accountants don't talk to their clients about. Now, 2, accountants are not bookkeepers. This is also the problem. A business with a 7-figure turnover shouldn't be relying on their accountants to reconcile their bank accounts payables and receivables. A, it's expensive, and B, it takes away from the value add that a good accountant should be doing, together with the review of a financial position, performance, and compliance work. So once again, accountants abdicating responsibility. Now, in our business, we have what we call a single touch accounting process. So we understand that the value that we add as accountants and financial advisors to our clients comes from the strategic review, the financial position. But the ability to give that advice comes to the integrity of the data. And what typically happens is that most accountants who don't do any bookkeeping work rely on an external bookkeeper or the client to send them a data file or ensure all of that reconciliation is done. Best case, there's double handling because they need to get a head around the data, question any discrepancies, or they accept it verbatim. And trust me, most businesses don't have a good handle on how to reconcile their P&L and particularly their balance sheet, which means that your ability to add value is limited. Instead, our single touch process is that we do weekly bookkeeping and reconciliation, we do monthly payroll and management reporting, we do quarterly compliance and on-track management, and then we go into annual strategic planning and tax planning. So all of these things cascade together in order to ensure that we have regular touch points with the clients that allows them to stay informed and educated, allows us to spot cash flow bottlenecks, and allows them to move the needle forward in their business. Because if you meet with your clients once a year to talk about data that's potentially more than 12 months old, that you don't even know is correct, how much value can you really add as accountants? And this is often the issue, right? Clients sit down with an accountant, they look at their financial statements, and they say, hey, congratulations, Mr. and Mrs. Client, you've made all of this profit. Where the hell is it? Where is it? Why isn't it sitting in my bank account? And there's this discrepancy between accruals and cash flow, and most accountants completely ignore the cash flow of their clients' businesses and play no active role in helping them improve that cash flow. Now, let's continue. If you're a business owner, you should at least minimum understand your business and structure. Whose responsibility is it to teach them? Did you learn that stuff at school? Was that part of your HSC? Unless you've studied accounting or financial planning or you've done an MBA, and even in those, most of them are big corporate principles that don't apply to small businesses, you don't know, right? And the issue is that most accountants speak another language, and they expect their clients to know this stuff, and they don't actually guide them through the process. And clients are happy to pay for the education. Not all clients, but the ideal clients are happy to pay. Educate them around the various structuring options. Talk to them about the pros and cons of companies versus trusts, and when bucket companies should come into play, and when they are going to likely grow out of their current tax structure. Talk to them about the structure of their bank accounts and ensuring that they put money aside. Talk to them about forecasting and budgeting, and how to run an AGM, how to implement corporate governance and financial governance in their business. Who's going to teach them these things, if not you as the accountant? And the problem is that most accountants just sit on their high horse and want to be the hero to the story, expecting that they are the be-all and end-all of their client's existence, but take no responsibility for educating them along the way, because you can barely explain it for yourself. You're too busy stuck in all of the numbers and the complexity to simplify it in a way that your clients actually understand. All of the things like the company's a separate legal entity. You can't use that money for yourself. What are you doing to ensure that that structure's in place as opposed to just reprimanding them for doing that stuff? How are you talking to them about taking more money out of their business? And more importantly, how are you talking to them about not just focusing on tax minimization, but focusing on actually getting money out of their business and building wealth? You wouldn't do that because that means you've now got to refer them to another professional, and that takes the shining light off you. And now we talk about the proactive. Yeah, sure, the payments aren't due for 9 to 12 months, it's the year after, but there's nothing stopping the business from scheduling their work a year earlier. Once again, how do they know this, right? Why aren't you talking with them about this to give them the option? Hey, Mr. and Mrs. Client, you may have a big tax liability, so maybe it makes sense for you to wait until the last minute. How about we get the drafts done so you at least know what you're going to be in for, but we're not going to submit them until the final due date. Or, hey, Mr. and Mrs. Client, are you planning to borrow, and do you need the latest tax returns in order for you to achieve your financial goals and objectives out of the business? So therefore, how about we schedule it in and get it done as soon as the end of the financial year is over, so we can make sure that we get that finalized so you can move the need forward financially, right? Once again, this is the basis of a proactive client relationship. And this is the reason why business owners are so bloody frustrated with their transactional accountants. And this is also the reason why I've been able to create an 8-figure business, because our clients value a trusted partnership. They value the down-to-earth nature of what we do. Look at me now. I'm sitting in a shed with my alpaca. And they value the common sense nature of how we do things because we take responsibility for our clients' results. What do you do?